and welcome. You're tuned into CNBC-TV18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Manisha Gupta, and with me is Nigel Dsouza, getting you your daily dose of commodities, currencies, and, of course, cryptocurrencies.
Well, hi, Manisha. First up, though, let's get our viewers, a complete roundup of what's going on in the equity markets. And there were fears with regard to a broader conflict between Iran as well as Israel. That, in fact, those fears eased a little bit overnight. And that's what led to a bit of a rally that we saw overnight. And strong close is what we had on Wall Street. The S&P 500 rebounded with a gain of around 1%. The Nasdaq, well, that outperformed with a gain of around 1.5%. It marked its best day that we saw all the way since the 27th of May. The futures, however, they're trading under pressure. That's because, in fact, investors are keeping an eye on the updates coming in with regard to the conflict on West Asia, and hopes are that there'll be some kind of de-escalation on that front, which as of now is not really visible. The big event this week, though, is going to be the Federal Reserve's interest rate decision. That's due on Wednesday. Markets are also pricing in a near 100% probability that the Fed will remain unchanged in terms of interest rate cuts, but the commentary is something that they will be eyeing. Retail sales data from the United States later tonight, that's going to be an important data point to track in terms of getting insight into consumer spend trends. So that'll be important, Manisha.
Oh, absolutely. Let's put focus also on the stocks in Asia Pacific. The Japanese market was the only spot of green. Nikkei closed above gains with a little over 0.5% after the Bank of Japan announced that it will slow down in the pace of government's bond purchases from the month of April next year. While it also held its benchmark rates at 0.5% amid rising growth risks, Shanghai, meanwhile, was closed with a flat rise. Back home, Dalal Street, the Nifty is hovering near day's low, erasing those early gains, trading sub 25,000 levels. Let's take also a look at the currency markets, and the dollar index has rebounded from its lowest point since 2022, and this is ahead of the US Fed Reserve policy meeting. The focus now remains on the conflict between Israel and Iran, with the US President Trump leaving the G summit earlier by a day and hinting via social media posts that a ceasefire may not be on the cards as of now. Indications also suggest that Iran could resume negotiations over its nuclear program if the United States refrained from participating in those attacks.
Well, I'll tell you what, we'll slip into a short break on the show, but on the other side, we'll go full tilt. We'll be joined by Sandeep Nailwal, the co-founder at Polygon. Stay tuned for that interesting conversation.
Well, it's a strong day for cryptocurrencies today. If you look at the Bitcoin, well, that is surged above $108,000, close to its all-time highs of $111,970. Well, we saw those kind of numbers just a month back. And it's not just Bitcoins, it is the altcoins, stablecoins, all of that doing quite well as well. XRP has also gained on the back of Ripple's swift ambitions. The optimism presents a compelling thesis for a long-term utility through integration challenges, and that keeps the prices higher. Solana, on the other side, is also surging on institutional backing and steady price action, making it a mid-cap altcoin to watch in the DeFi sector.
Well, but why are cryptos surging? Wall Street's crypto embrace continues as JP Morgan files trademark for digital asset platform. As per the filing, JP Morgan will offer services including digital asset trading, exchange, payments, as well as issuance. In fact, Tron's public listing is seen as investors' Visa moment for stablecoins.
Oh, well, absolutely, Nigel. And the other major point that has led to many of these cryptocurrencies trade quite firm is that Vietnam has passed a landmark law recognizing crypto assets. The law outlines a framework for managing digital assets and fostering blockchain innovations, and this will take effect from the 1st of January 2026. Well, we also have seen Polygon, the scaling leader, also recently gone through a revamp, and that's exactly what we have been talking about as well. We have with us Polygon's Sandeep Nailwal joining us now to talk about the revamp within the company, within the industry, and where does he see cryptocurrency as a segment moving from here. Sandeep, hi, thank you so much for joining us. First of all, congratulations on stepping up as the founder of Polygon. What does it mean? What does it mean for within the industry as well? And how are you now restructuring this company?
The crypto protocols, they work a little bit differently than the traditional, startups and all that. The protocols generally are run by the foundations who control the whatever ecosystem, treasury and things like that. And then they fund various organizations who are building the protocols because the foundations are non-profit, but they are the ones who, provide support to the ecosystem, provide support to the people who are building the tech to build it in the correct way, to build it in a more directional way and all that. And, I recently took over the CEO of the foundation because the foundation was previously consisting of a board and all that. And these were during 2022, 2023, when, Polygon was also like a $30 billion company and or the foundation of protocol. At that time, like I had, tried to institutionalize a lot of things and have like a very formidable board, having multiple co-founders on board, the board and all that. And that was good for stability and for that level of, the success of the protocol. But recently, what has happened in the crypto space is we saw even Ethereum actually got its, the layer one position or the de facto layer one position shaken a little bit. And due to that, what started happening is that all the Ethereum ecosystem, because Polygon is building in the Ethereum ecosystem only. It was previously building a layer two. Now it is, it's actually building an interoperability between chains. You can also think of it as an internet of blockchains, what Polygon is building now. So due to that, all the projects in the Ethereum ecosystem faced a lot of pressure because the base layer itself, had its own risk coming in and all that. And I think due to that, the entire Ethereum ecosystem went into this new discovery of the PMF, of the long-term priorities, focus, everything. And that essentially brings Polygon back from this 10 to 100 journey to, I would say, 0 to 1 or 1 to 10. So which needs, not that much of stability of the board and all those things. It needs more of your, fast moving, the way startups move, fast, aggressive, bold moves. And you take a lot of calls and, some of them will work, some of them will not work, and you will capitalize on what is working and all that. So I wanted to make sure that, Polygon goes back into that 0 to 1 or 1 to 10 nimble mode. So that's why, I basically took over as the CEO of the board. So now all the ecosystem companies, Polygon Labs, which is led by Mark Byron, they all report into me instead of reporting into the board.
Hi, Sandeep. Good to speak to you. It's been a while since we connected, but good to have you on the show. Let's put the spotlight on Polymarket's recent partnership with X. Give us a few details. How is that working out, and what does it bring to the table?
Web3 space. Polymarket is for those who don't know, it's a prediction market app, which is probably the most used prediction market app globally. Many of you guys must have seen those charts during the US presidential elections of the chances, the odds, and all that. All of them were built on were from Polymarket, and Polymarket is built on top of Polygon's flagship chain. And now this partnership with X means that the inflow of the users, Polygon peer chain already has around 300 to 400 total wallets, 400 million wallets. And then out of them, I think there is like 10 to 50 million active wallets. And I think this increases the number of wallets, the number of users that will come to Polymarket and they use Polygon chain underneath. So that means that a lot more transactions, a lot more revenue, a lot more users for the Polygon chain also. So that's where we are. And it's a very interesting phase. But I think more than that, it's a victory for the entire Web3, because now one application is an official partner to the world's largest social media platform, and this is first time this precedent has happened. So yeah, really excited about that.
Oh, well, absolutely. This partnership, as you said, Sandeep, is going to do wonders going forward. And as you've been telling us, fast, bold moves, layer one scalability has been amazing. And as you spoke about interoperability as well, I mean, that's something that the street is watching out for. But Sandeep, what are you also making of the real world cases? That adoption seems to be picking up right now. Also, how are you looking at the blockchain technology supporting that? We've seen various institutions, startups talk about that and adopting that as well.
Yeah, so the real world assets, the tokenization is becoming very, very popular, and it is like the theme currently in the industry. And for those who don't understand, this is basically it's not a technical concept. Like imagine you had like all of us, some point in time bought mutual funds. We bought like those. The tax saver funds people buy and all that, right? And also we buy land, cars, all those things, right? But these are all real world assets. But what is happening is that in blockchain we are now seeing a phase where a lot of people are tokenizing all of these assets on blockchain. What it means is that you might have a house which is worth, let's say, $1 million, and you could actually tokenize it. And then if like there is demand for it, you could actually sell the fractionalized versions of it. Like you can already see in Dubai, for example, a lot of the real estate providers, real estate players who are launching their new projects. And initially in these real estate projects, mostly it's the investors who are buying, right? And they fill up the first kind of order books in that sense. And what they are doing is they are tokenizing these, like let's say the new building is coming up, they will tokenize the whole all of the apartments and all that. And the buyers, the investors who are there, they don't need to buy the entire apartment. They could buy 1/4 of the apartment. Let's say one apartment causes 1 crore rupees, and I don't have 1 crore rupees to invest. I only have 25 lakhs to invest. I can buy 1/4 of the apartment, because that apartment is now tokenized and you can buy fractions of that token also. So that opens up the economy because it's very connected to the real world assets, so real world regulations and all that. The flow will be slow. It will not be like DeFi that in 1 year you have a $30 billion market coming up. But then I think in the last 1 year, we have seen $10 billion of assets being tokenized. But I think in 2025 to 2026, you would see up to $100 billion worth of assets tokenized on chain.
Oh, well, absolutely. You know, Nigel, as Sandeep is telling us, if there was a 25 crore building, but the flat was worth 25 lakhs, that is what you can buy in sense of tokenization. Also, Sandeep, this is something Sandeep told me way earlier, that if you want to buy a part of an aeroplane, you can buy a tokenized version of it. I mean, that's how interesting stuff is happening. And as Sandeep is telling us, in Dubai it's happening, in Indian markets very, very small. But this is something that we as people are yet to do.
Indeed, it becomes affordable, and it increases the participation as well. So interesting times. Well, Sandeep, let's focus on the way the US seems to be taking the lead when it comes to crypto. The latest vote that took place in the stablecoin. What's your take? Would you say that we're headed in the right direction?
Yeah, I mean, US has completely cleared up the way for everyone. Like, I don't know whether you guys, many of the viewers saw that, but the SEC chair, Paul Atkins, I think 3-4 days back, had a very positive statement about that. They now recognize that the DeFi and crypto and blockchain is going to be the spirit of innovation of America, just like they did it with the internet today. Like today, some of the biggest and the largest internet companies are US companies, Google, Amazon, Facebooks of the world, Meta of the world. And I think they recognize that. And now they are actively promoting the DeFi protocols, DeFi companies in the US, registered on the US soil and governed by the US laws. And I think that is a big boost for the industry. And I think that's also a very big, kind of, again, a directional North Star for us, like countries like India, where the regulators need to see the potential in this and, open up their basically doors for this kind of innovation to happen. Like stable coins also, you can see that US stablecoin, I think we are approaching $250 billion in US stable coins. And this is nothing but people buying the US dollar keeping it in a bank, like these asset issuers, they keep it in the bank with US Treasury, in the US Treasury notes, and then issue these, synthetic dollars on chain. And due to that dollars, those on-chain dollars can be used globally anywhere. Right? Imagine in India, you wanted to use dollars, you can't use dollars today. Because you have to bring the actual physical cash, and then the adoption or the acceptance for that would be very less. But same thing, you do it with the dollar, USDT, USDC on chain, and we keep hearing these stories, even though this is not allowed. But a lot of people are using it, in a non-government allowed way. You can say illicit way. But the usage of that dollar, like we keep hearing these unofficial reports that probably per day it's like $500 million to $1 billion. People are transacting in the dollars, and essentially what is happening is that this is a dollar export into Indian economy. And I think the Indian economy can do the reverse. We could actually allow stable coins, INR stable coins, and allow INR stable coins to be exported outside, right? So I think that should be taken up very, very seriously by the regulators.
Oh, well, absolutely, Sandeep. When you talk about $500 million exported into Indian economy in a not regulated way, illicit way, something that perhaps make an even stronger case for the fact that India should be looking at making a strong paper on this. We are still waiting on the sidelines for this. Would you say a conversation about putting out a global paper perhaps is needed way more than what was earlier needed? US seems to be doing that. India also has perhaps a timeline now. How are you reading into many of these scenarios within Asia, especially India?
I would say that, the papers and all is fine. Like we have been doing it for last 10 years. I think the regulators should provide sandbox for the environment, for the startups. I've always said, provide a sandbox, let the startups figure out, let the startups build money-making businesses, and that will show you much more leads in the future, what we should be doing, how it should be governed, instead of few big four consultants or some business consultant coming and writing a white paper on something, right? Like I strongly recommend that the government should provide sandbox and allow the startups the playground, watch it, observe it for 2 years, and then you come up with these papers, because you will have real world first-hand experience in the Indian economy, what the users are, what the startups are doing, and then you can actually regulate it much better.
All right, Sandeep, what more can we expect from Polygon going forward? If you could give us a sense on that front, give us a bit of a hint in terms of what's in the pipeline right now.
So all the things that I'm saying, like globally also, that I said, like, with Apollo and, with Polymarket, what is happening, and then we have some big news coming in from Europe side also. Some of the biggest players there are going to initiate work with us. And in India also, we continue to see these pathways where we can engage with the regulators, with the startups, with the big startups who want to do something in this domain, and helping them so that India doesn't stay behind in this. And that has been my penchant for last 7 years at Polygon, that India should be at the forefront of this. So especially for India, we will keep doing our part of the efforts and see where it takes.
I get your point that for the last 10 years, we've been talking about papers and some kind of regulations coming in. Haven't seen that happen. But for the longest time as well, every year we see a new trend emerging, Sandeep, in the crypto markets. We saw NFTs, and then which stabilized, and then the gaming was the next big trend. Even Polygon, I remember, was pushing a lot of its might into gaming. And then blockchain technology continues to stay quite strong. Web3 is something that seems to be really picking up at this point in time. And according to the Coinbase survey, more and more Fortune 500 companies are now looking at this technology, even adopting it. DeFi has also kind of stabilized right now within the Web3 and blockchain technology as a space. What do you think is now needed? What is stabilizing? What is coming in?
I think the blockchain space has gone through nothing different than the typical for any new innovative technology. I think, I think Gartner has this Gartner hype cycle. It's called hype cycle or some hype graph, where any new innovative technology which has a lot of promise, initially it is like, it goes like parabolic. Everybody is thinking that this is going to change the world, it's going to cure the cancer and all that. And then those, because the tech takes time to build. So then those hype and expectations hit the reality, and then those expectations die down, and then you go through a death valley. And then the sturdy technologies, long-term technologies emerge from that eventually. And that's what we are seeing with stablecoins like have been around since 2017, 16, 17, right? And it's not new, but only now people see that, oh, like this stablecoin, the stablecoin issuers have hundreds of billions of dollars in their treasury notes, in the US treasury notes, and they are making 5% yield on that. So the Tether, which is the largest issuer, they made like $13 billion of pure cash by holding like 150 billion odd, the dollars on their books. And now all the VCs and everybody's thinking, oh, this is a money printing machine. Like, we should be doing more about it and this and that. But, it did not happen in 1 year. It took its time. Same thing is going to happen with DeFi. DeFi, we were talking about DeFi since 2017. It only took 2020 for the DeFi to go into a parabolic spin. Then, in 2022, 2023, then the gaming came and everybody's like, DeFi is dead, DeFi is dead. Now you see DeFi is picking up like massively, right? The top protocols in the DeFi space are getting repriced as per their revenues and all that. And the same thing is going to happen with gaming. You just don't know whether it's going to happen this year, next year, but it is going to happen because gaming and these, amusement actually has value. These on-chain, the gaming assets, virtual assets, people now spend large parts of their life in the digital realms, and the value, things are going to have value over there. So you will see sooner or later, like, blockchain and gaming coming back very strongly. I can already see some of the telltale signs that, the expectations was that many of these blockchain based games would be billions of dollars in worth, and some of those tokens did do billions of dollars. But the reality is, like, if there's a good enough game, a medium scale game, that game in a normal web2 scenario, that game has no fungibility, that game has no exit for the founders, or they can sell the shares and all that, they can make some revenue. But now you can see there are good number of games who are good games, but their tokens are doing like $100 million, $150 million in market cap. And that itself is a super good outcome for the game developers, which did not have any of this. Like, now they can build a game and then tokenize, and then, let's say, make few $1 million in their liquidity by selling the shares of the company also, while there is a revenue stream coming in and all that. So I have no doubt that gaming will also come up. The way DeFi has come up, stable coins have come up, and you will see NFTs also doing their revival sooner or later.
All right, Sandeep, a final question before we let you go. With so much happening in the space, where do you see, say, the next billion-dollar users coming from? Is it tech, or will it be regulation?
Right now, the next 100 million users, I'm not saying billion users, 100 million users are going to come from the financial world only. Like, what crypto is, I always say that when people say, what are the new use cases of crypto? And I'm always like, why, like, did cloud computing have new use cases? Or the existing use cases, like today, cloud computing, healthcare uses cloud computing, travel uses cloud computing, finance uses cloud computing, governments use cloud computing, everybody uses cloud computing. It's a computation form. Similarly, blockchains are a trustless computation form, where the users have to rely, or users have more transparency, more auditability, with the financial, especially the financial issuers and all that. And then, later on, like, more basically transparency around the applications they are interacting with, and which is a need of the hour, but it's not like a burning need of the hour. Everybody, if you ask them, they would want, yes, if there was a Twitter, there was a YouTube, which is owned by the users themselves, where the users cannot be deplatformed, yes, they will go there. But will they go today, while it doesn't have the network effects, it doesn't have that much content, interesting content? No. But then once that content and all those things grow there, the users will go there. So my point is that there are not going to be new use cases of crypto. DeFi is not a new use case. Lending, borrowing in DeFi is not a new use case. It happens in the world. It's been happening since, the dawn of time, right? So or dawn of humanity at least, or civilization at least, right? So they will keep on happening. There is no new use case. It's just that my strong belief is that the financial world of the financial world or financial industry is waking up to the fact that this is a better financial infra of issuing. Like I already talked about tokenizing the assets. It's unlocked so many parts of the economy where in the traditional banking and finance world, those assets are locked in some place. This actually tokenization and the trustless part of that, because now you can see that the token is there. You are converting these registered assets which the registrar of the person controls, and you're converting those registered assets into bearer assets, and those bearer assets now anybody can take on chain. And if I bear a particular asset, coin, fund, a tokenized fund, I can just go because I bear it. Blockchain proves that yes, I own that. I can use it to take loan. I can sell it into the market and all that. So these are going to be existing use cases only. But blockchain, you will see in the next 10 years, blockchains will slowly replace the traditional infra of the finance and basically the financial world. And that would be the victory of blockchain. And slowly it will go underneath. You will not even realize that, okay, you are interacting now with a blockchain based protocol. You are just interacting with some financial primitive or financial asset or instrument. And that's pretty much about it as a user.
Oh, well, absolutely. That's a lot of information that you've given to us, Sandeep. Me and Nigel sitting here are still digesting it. As you said, blockchain will replace the basic financial infrastructure. I mean, that's a big statement to make. And well, yes, we don't even realize we're using internet now. And if that is what blockchain is going to bring to us, that is something that is worth holding. Nigel, as he said, big returns come to those who hold it for the longest time. And well, yes, those millions, billions of dollars that people are making in crypto, in various asset classes, in sense of tokenization, perhaps is the way to go forward.
Well, that's right. It appears it's the way to innovate, tokenization, as you said as well earlier. And in fact, need to hold it on for the longer duration. The only problem is at times things get very, very volatile. So that's when that advice of holding on for the longer term and wait for the asset to evolve, I think that's when it comes into play.
Well, that's a mantra. But with that, that's all the time that we have on this show of our Big C. Come back tomorrow with more news, more updates. Join us.